Hey guys, it's Dave, your mortgageguy.com, and I'm back with another market update. This one is ridiculously long, so save this video, take notes, go back to it, forward it on to your clients, whatever works for you. Keep in mind, like I said in my previous videos, everything I'm going over with you are changes that I'm seeing in the market from talking to other loan officers, other mortgage companies, seeing their guideline changes, okay? And even things I'm seeing in my own business, all right? So this is not me stating changes that we're making as a lender myself, okay? In fact, a lot of these changes I'm not making. But many lenders are telling information right now based on their guideline change as if it's a universal guideline change, and that's not the case, all right? So let's get started. Number one, jumbo loans. I'm getting a ton of phone calls and emails from agents about jumbo loans. Many lenders, in fact, I just talked to two who are no longer doing jumbo loans as of immediately. On any level, they're not doing jumbo loans, okay? So that's the first thing. Jumbo loans are getting done. I'm actually clear to close on one, and this is after the market going crazy. Clear to close, we're closing on Friday, okay? So absolutely jumbo loans can close, okay? FHA loans. This is the one where it's getting crazier day by day. I've actually now seen multiple reports and talked to lenders and loan officers where they're going to a minimum 680 credit score on FHA government loans, VA loans, or whatnot. That's not good information because many of those buyers are in the mid to low sixes, okay? Now, is that every lender? No. Some of them have gone to 640. I'm still doing down to 580. So it just depends on the lender, okay? But that's not something that's universal. I'm seeing that where the loan officer says no FHA loans under 680 for anybody. That's not the case. Limiting debt ratio. So I'm now seeing where lenders are adding an additional guideline, what's called an overlay. So on top of regular underwriting guidelines, where they're reducing the max debt to income ratio. So let's say they would be approved up to a 50, but now they're gonna limit it to a 45, okay? That's that lender making that change, all right? This is one that's crazy, which is hard for me to believe, but is truly happening and is out there. Self-employed borrowers. Many lenders are now reducing the qualifying income by 25%. I've got a friend of mine who's a loan officer. They just enacted this rule change. So the underwriter, let's say they made qualify at $10,000 a month in self-employed income, is now cutting it to $7,500. What is that doing? That's limiting their ability to qualify for buying a home or refinancing, okay? So that's a scary one that some lenders are doing. That again is not a universal change. I do not have that rule. My underwriters are not using that rule because it's not a rule. It's lenders getting conservative and making that change. I'm also seeing issues with rate locks. So many lenders are now saying that they can only lock for 10 days or 25 days, okay? Or if the loan is clear to close, which is what I'm hearing as a rumor is what Quicken is doing, is that they can't lock the rate until you're clear to close. So your client needs to know that they're locked in, not here's my rate and then we're gonna start the process. Get confirmation that the rate is locked and how long is it locked for? Because if you're closing in 30 days, but your rate lock is only good for 25, it's not long enough. And the market is very, very volatile. So rates are greatly changing all the time. So that could affect how much you can get approved for. I'm also seeing issues with rental income. Some underwriting guidelines I've seen are now saying that they won't allow rental income unless they can prove 6 months of it. So if you plan on renting out your current home to qualify for the new home, those lenders are getting much stricter. This is not a true guideline change. This isn't what you're seeing at certain lenders, okay? So a humongous amount of changes that some of them not, obviously are not good, but we'll get through it. And again, take it at face value. If your lender is saying that this is the change, is it just them as a lender? I think a lot of lenders right now are talking about their own changes as if it's the gospel, when they don't know their market, they don't know their competition, they don't know what else is out there, okay? And that's why when I do these videos, I do my homework for you guys, so that way you really know what's going on, all right? And then I wanna leave you with this. If you work with a mortgage broker, and I'm gonna get yelled at for saying this, if you work with a mortgage broker now currently, I would absolutely be very concerned. Here's why. Those brokers are just sending the information to another company, which means they have no control over it, all right? I'm a mortgage banker. It's my underwriters, my everything, right? So I have 100% control of the process. That's what allows me to do jumbo loans, low FHA scores, all of those things. So that's your market update. It's not fun or enjoyable for any of us, but I'm gonna continue to bring them to you. Please call or email me. I've got a lot of agents reaching out to me on what they're hearing so they can get the truth, which is a huge honor. So don't be afraid to take me up on that, all right? Have a great day. We're gonna get through this. Call or email me anything. Comment down below. Subscribe to these videos. And if you find my videos helpful, I'd love to be your lender. Thanks, guys.